Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not any real economic data coming out across the pond, but here in the United States, we got building permits. Came in slightly higher than expected at 1.26 million units, expected to be 1.25 million permits, I should say, rather than units. And then housing starts came in at 1.22 million units, expected to be 1.25 million units. So we always talk about the building permits kind of being forward looking. A lot of people look at it that way, not necessarily me. Building permits can be pulled and never used. The housing starts is a bit of a lagger in a sense, but it really gives the true number in a sense. So building permits is a little bit wanky. If you see them really pulling back on pulling permits, then that's a bit more of a red flag for slowdown in economy, if you will. But just because they're pulling a lot of permits does not necessarily mean there's robustness going on in that sector. But anyway, moving on. Capacity utilization came in at 76.1, was expected to be 76.3, so just slightly lower than expected there, but not really any concern. And then industrial production came in at 0.5%, was expected to be 0.5%. Other than that, overall day pretty quiet for the most part. We have had a lot of movement in a sense, but it has felt like a lot of movement, I guess, as we have sold off drastically, come back a little bit, and now starting to wane a little. So it does seem like it's been a bit more of a market moving day in a sense than what the numbers really show. Anyway, crude oil slightly down on the day. Oh, one thing I did want to note with the crude oil, we noticed that the volume profile has now converged. Remember, we were having the time volume stay down here for a little bit longer. We first saw the volume move up. Now today we're seeing the time node move up lockstep with the volume node, which means price has been accepted here. This is where the market finds value for crude oil, so the market in general. Really kind of throwing my 45.50 kind of out the door at this point, unless something drastic really happens that is not longer feasible, at least at this point. Anyway, on to gold. Gold's down just slightly on the day. Candle does look a little bit positive, but sometimes the charts are a little funky on that. It's getting a little overextended, but again, it's flight to quality as volatility's increased and the equities have kind of had a bit of a rough go at it. Yesterday was a nice rally, but remember there was a lot of bank holidays across the pond, and a lot of times when there's lack of volume, lack of participation, we will see that market rally. So that was not really unexpected. Today, what is unexpected though is that we are seeing the bonds up over a point right now, really charging higher. You know, I talked about the fact that the bonds had priced in the Fed rate hikes, lower bond prices should prevail. Right now we're seeing that get bunked and the bonds cruising higher, maybe as the volatility is increasing, more fear being put into the markets. We're seeing bonds be the beneficiary of a flight to quality. Dow Jones Industrial Average, as you can see here, it's down 90 some odd points, giving up a bit of yesterday's gain. We are right there at the 50-day moving average. Yesterday we pierced above even the 9-day moving average.